Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of Governance and Ethical Investing, the Future of Finance. Governance as a factor in ethical investment decisions. Governance plays a pivotal role in determining which companies are deemed fit for ethical investment. When investors consider governance, they look at several key factors. Board diversity. Does the company prioritize diversity among its board members? A diverse board can bring varied perspectives, promoting better decision-making and reflecting a commitment to equality. Companies with greater diversity often attract ethical investors looking for inclusivity. Executive compensation. How much are a company's top executives paid? Investors scrutinize whether compensation packages are fair and based on performance metrics that promote long-term growth rather than short-term gains. This aspect speaks to the ethical responsibility of a company not to prioritize profits over fair treatment. Transparency in practices. Do companies openly share information regarding their activities and financial health? Transparency is critical, as it builds trust. Ethical investors often shy away from companies that obscure their dealings, fearing hidden risks or unethical practices. Governance factors are akin to a moral compass guiding investors. They ensure that their investments don't just offer financial returns but also align with ethical beliefs and values. Case studies of governance and ethical investing. Looking at real-world examples helps illuminate how good governance can attract ethical investors. Consider these cases. Patagonia. Known for being environmentally conscious, Patagonia isn't just a leader in sustainable practices. The company also showcases strong governance by having a transparent business model and fair employee compensation, making it a favorite among ethical investors. Ben & Jerry's. This ice cream company goes beyond tasty flavors. It embeds social responsibility into every scoop. With a diverse board and equitable pay policies, Ben & Jerry's governance model attracts investors eager to balance profit with purpose. Unilever. With a commitment to reduce environmental impact while increasing positive social impact, Unilever's strong governance framework makes it a beacon for ethical investors. Their transparent reporting and commitment to sustainable living plans exemplify the intersection of governance and ethical investing. By evaluating these examples, we see how governance not only influences investing decisions but also highlights the growing demand for corporate accountability. When companies build governance that reflects ethical values, they invite investors who are not just chasing profits but are also committed to making a positive impact. Challenges in governance and ethical investing. Investing with an eye towards ethics can feel like walking a tightrope. On one side, you want to be sure your money supports companies with good practices. On the other, financial returns are essential, too. This section dives into some of the key challenges investors face in this space. Greenwashing and misleading practices. Have you ever bought a product labeled eco-friendly, only to find out it wasn't as green as it seemed? This is the essence of greenwashing. In the investing world, greenwashing occurs when companies market themselves as ethical or environmentally friendly but fall short in reality. For ethical investors, greenwashing is like a mirage in the desert. It promises a lot but delivers little. The implications are significant. Misplaced trust. Investors might put their faith and money into companies that aren't genuinely sustainable. Questionable impact. Resources get allocated to businesses that aren't making a meaningful environmental difference. Investor confusion. Sifting through misleading claims to find truly ethical investments can be daunting and tedious. To navigate this landscape, investors need to do their homework. Look for companies with transparent reporting and those that back up their claims with data. Trust, but verify. Balancing profit and ethics. It's often said that money makes the world go round, but what if the world needs to slow down and think ethically? Balancing profit with ethics in investing is like trying to keep two disparate songs in harmony. The tension arises when the bottom line seems at odds with moral standards. Consider these challenges: profit sacrifice. Ethical companies might have higher costs due to sustainable practices, potentially leading to lower short-term profits. Long-term versus short-term. Ethical investments may promise long-term gains but can require patience. Investors looking for quick returns might struggle with this timeline. Contradictory goals. Sometimes, a company's ethical goals might conflict with profit margins, forcing tough choices. However, it's essential to remember that ethics and profit aren't always at odds. Like a seasoned conductor, a savvy investor knows how to orchestrate both successfully. By aligning investments with personal values, the long-term rewards, both financial and ethical, can be truly fulfilling. As the old saying goes, do well by doing good. But achieving this means navigating the fine line between profit and ethics with care and diligence. Future trends in governance and ethical investing. As the world changes, so do the ways we manage investments and ethical governance. New technologies are emerging, and regulations are evolving, influencing how investors and companies operate. Let's take a closer look at some of the trends that could shape the future of governance and ethical investing. Emerging technologies and their impact. The technological landscape is buzzing, and it's not just about flashy new gadgets. Technologies like blockchain and artificial intelligence, AI, are making waves in the investment world. How exactly? Blockchain offers unparalleled transparency. Imagine tracking every transaction with absolute clarity. This technology enables investors to verify information without the need for intermediaries, potentially reducing costs and boosting trust. It's like having a digital ledger that everyone can trust and verify. AI is transforming decision-making. With powerful algorithms, AI can analyze vast amounts of data to predict trends and assess risks. It's like having a super smart assistant who can sift through mountains of information in minutes, helping investors to make informed decisions faster than ever. These technologies don't just make investing smarter, they also bring ethical benefits. For instance, AI can help identify companies that truly adhere to ethical practices, while blockchain can ensure the authenticity of this information. It's a high-tech way to keep investments honest. Regulatory changes and their implications. Regulations play a crucial role in shaping how investments are managed. As the interest in ethical investing grows, we may see regulators stepping up their game. What could this mean for the future? Increased transparency requirements. New rules might demand more detailed reporting from companies, ensuring that investors have a clearer picture of where their money is going. Transparency isn't just a buzzword, it's a tool for accountability. Stricter environmental, social, and governance (ESG) standards. As public awareness of social and environmental issues rises, regulations may require companies to meet stricter ESG criteria. Think of it as raising the bar for responsible business practices. Global harmonization of standards. We could see more countries aligning their ethical investing standards, making it easier for investors to navigate international markets. It's like speaking a common language, breaking down barriers for global investors. By staying informed about these potential changes, investors can position themselves for success in a landscape that's not just evolving, but transforming at its core. While the future is never set in stone, being prepared means being ready to seize opportunities as they arise. Governance plays a central role in ethical investing, creating a path toward a sustainable future. By prioritizing transparency and accountability, investors can ensure that their choices align with their values and drive positive change. Ethical investing is not just a strategy, it's a commitment to stewardship and responsible growth. As you consider your investment options, think about the broader impact of your choices. Engage with your investments and demand the highest standards of governance. Embrace the power of ethical investing to not only grow your portfolio but also to foster a better future. Share your thoughts on this journey and let's build a community committed to sustainable growth. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.